The engines of global growth are humming. The International Monetary Fund is projecting 3.9% growth for this year and next. And yet, the IMF's economists are casting a shadow over their own forecasts, the possibility of a trade war between China and the United States.
If we get into a cycle of very widespread actions and counteractions, we would begin to see significant economic effects, and that would be, whether you call it trade war or not, would be very worrisome.
The IMF sees related risks emerging from the recent US corporate and personal tax cuts. They see just a short-term boost, leading to higher interest rates and rising debt, which in turn exacerbates global trade imbalances. The prescription from the IMF is to focus instead on policies to expand the benefits of globalization to those who've been excluded, using long-term pro-growth policies like education and training in high technology.
At the IMF, we've been saying for a while now that the current cyclical upswing offers policymakers an ideal opportunity to make longer-term growth stronger, more resilient, and more inclusive. The present good times will not last for long, but sound policies can extend the current upswing while reducing the risks of a disruptive unwinding.
For now, the IMF is calling the current tough trade talk initiated by US President Donald Trump a phony war, but one which could still escalate. So policymakers gathering here at the spring meetings of the IMF and World Bank are making the case that multilateral institutions can help these nations to negotiate their differences in order to avoid a damaging trade war in which everyone would lose out. Ryntjes, CGTN, Washington.